Macquarie also put out its full-year profit on Friday. It was down 24% to $730 million, pretty well within market expectations. But they only put out the warning in February, and so that wasn't too long ago. They ought to be within those expectations. Here's CEO Nicholas Moore.
Confidence, particularly in the first half of the year, it's actually continuing. It continued into the second half of the year, and frankly, it's continuing today. That people, equity investors, are nervous. So whether they're a long-only fund or whether they're a hedge fund or whether they're a retail investor, everybody's sharing that same degree of nervousness about how reliable will be the income that these companies that they might invest in, how reliable will that income be going forward. And it's that uncertainty that we see in terms of very low trading volumes.
Well, it's not the millionaire's factory anymore, let's face it. Or is it? Maybe it is.
Well, it is. Well, Nicholas Moore got a few million, so yeah.
He got 7.8.
That's never in doubt, John. That is never in doubt.
He got a pay cut of $1 million.
Yeah, so that's true. Well, look, I think we can say a lot of things about Macquarie, but the reality is the investment banking business is doing it pretty tough around the world, and they're doing no worse. In fact, in some respects, they're doing better because they've got more of a conglomerate, and they've got, as he likes to say, an annuity business to offset the fact that his stockbroking business is losing money, which is, I think he's right to be confident that when the market does turn, Macquarie, as much as anyone, will be well placed to exploit that. But it's just not a good place to be right now.
Well, return on equity, if you're a shareholder in Macquarie, is 6.8%, and if you put your money in a Macquarie cash deposit, you're going to get 5.7%.
Exactly.
So at the moment, the payoff for being a shareholder in a very risky enterprise is very, very small.
Yeah. But they basically have to reinvent Macquarie, don't they? I mean,
every year they do it.
Every year.
Of the $730 million in profit, $290 million came as a result of the special dividend from Sydney Airport. So they're going to have to find
an investment company in part, aren't they? So
yeah, that's right.
That's the business. Yeah.
But they're going to have to find another hollow log somewhere.
Well, maybe they'll sell off the rest of Sydney Airport.
Well, they said it's for sale. They've got Southern Cross Media. There are other assets in the. But you know, they're amazing how they can continually get to that threshold level by a deal. You know, they did it with Macquarie Airports and the internalisation of those fees. But the other thing that should be noted too is that they are committing to buy back 10% of the stock. So, you know, a certain amount goes to staff, but the rest is, general capital management.